Trading Market Technicals morning call video for Thursday, July 18th. Well, we did get some green across the board. Real slight upticks here in the Dow up 18, Nasdaq up 11 and a half, S&P up 4, and the Russell continues to lead this market up 3.78. So that is a good sign when you have Russell 2000, which gauges risk, that you have money flowing into that, which tells me that obviously there's no fear. You could look at that by the VIX. But anyway, we did get some earnings report yesterday after the bell. Intel, IBM, eBay, all lower at one point, and IBM actually was lower and then managed to close with some gains in the post-market session. Ben Bernanke will conclude his testimony today, so it'll be interesting to see what happens and what he has to say to wrap up his speech. Yesterday wasn't anything really exciting, and I think he's probably going to steer away from that. I'm sure he had a little bit of a heat when he spoke dovish and then less dovish just a few weeks ago, and markets rallied. Now we're sitting on all-time highs in the S&P and the Dow with this double top formation. So we're going to go through that in the chart segment, but I want to show you some indicators here and just kind of see where we are in the longer-term picture. We're actually in real good shape as a picture as a whole. The bullish case is still well intact. Now we have new lows here. Anytime you're in this area here and you're at the 10 EMA, you are looking fine. When you have these spikes up like this is where markets tend to start to sell off, and this is where we actually bottom when we have these large spikes up. And you can see that's exactly what happened here. Market actually bottomed, and then we've gotten this crazy rally here. But we're okay. This is fine. Take a look at the tick. Again, tick well above zero, no problem. This is also really good for the bull case. The NYMO now basically taken out back into, not overbought. We're still up there, but we're not really in nosebleed territory anymore, so we're at about 40, 45. This is actually okay as well. Okay, stocks above the 50-day moving average. I haven't showed this to you in a while. Want to show you that now we're excuse me, we're back up above this 81 percentile. Okay, so now this is something that we're getting a little bit stretched here, and we're going to need to see this actually come back in again. I like to keep it above 50. You know, anything above 50, or even for that matter above 25, would be okay. But right now we're up about the 81 percentile, so a little overboard, but nothing really to write home about. And the VIX roll right back down again, back to the 13 and a half. So that's just doing fine. So I could see that the bullish case, the longer term picture, even as far as the market's concerned, is well intact. Okay, now here's the dollar, and we mentioned about the dollar, and you really should do your analysis off the dollar every night or pre-market before the market opens up. Now we're here, we're just holding right in this area here. I wouldn't even mind to see the markets rally really hard for a couple of days. Dollar catches a good support area, which would be somewhere around 80. See, 81.39 is where it is now. Usually the averages continue to move here, so 81.50. Even between 81.50 and 82, you're going to have some real good support. Let it chop around for a few days, and then the dollar starts to explode. And if that happens, then that would actually put pressure on stocks and commodities. So that's what I'm looking for the dollar to sell off a little bit more, let it base, and the markets rally to new highs again, and then the markets sell off, and then we get a small correction, and then possibly that push higher into the fall. Okay, remember now, we're at the second week of July. We have about 6 weeks left of the summer, and the summer doldrums are here, boy. Let me tell you, it is quiet out there, and that's why we need to be selective. And I got a couple of comments yesterday I wanted just to share. You know, like, what do? You know, you're down money, and you know, it's difficult to make it back when you're down money because there's really no volatility. This is just very quiet. Well, the way to handle that is that if you're down money, you know, keep it within your parameters, and then I'd like to say, okay, I'll give it one or two trades. If they don't work out, then I just really call it a day, because you're just beating yourself over the head. You know, it's not worth it. You know, just take a step back, see what happens, and then go from there. You know. Okay, so there's the dollar. Let's go into the chart segment, and here's what I'm talking about here. See, we're consolidating here. We had 3 days, actually 4, even if you take this this candle here, but we're still right at the upper end of the range, 166.92 to 168.42. So we're just really right here, chopping around here. Now, this is actually a good thing because it's actually just unwinding some of this overbought reading ever so slightly. But if it does, if the markets can chop around at the upper end of the range again, then it gets fuel for this push higher to break out this double top here. Okay, that's the spiders. Same thing with the diamonds, as you can see here. Diamonds even more so that you can see we had 5 days of just literally inside day, which is actually a good thing. Now, markets can easily break down, and we can test this long-term uptrend line in the diamonds. But when it's hovering above here, above its 8, it does build pressure to break out. Now, if it does break out, we all know where the stops are. Going to be right above here, give or take a couple of a dime, 20 cents above where the all-time high is in the diamonds, as well as the spiders. Okay, so if that happens, that's going to fuel a short covering rally, and we're going to explode to the upside. Okay, probably get about another 2 or 3 days of gains. Okay, IYT, which is the transportation ETF, not quite there, but again, just hugging this long-term uptrend line from November of 2012. So we'll see. Let's just take it one step at a time, guys. But right now, things look quite well, unless Ben Bernanke throws a monkey wrench into this market here, and he can easily do that, as you can see the last 6 weeks of both of his comments. Okay, same thing with the IWM, with Russell making all-time highs. We did get the Russell itself, the future, continues to make new highs, where we did get a little consolidation here for 3 days in the IWM. But again, still constructive. We're in an uptrend channel, breaking out of this downtrend base. So this is actually still constructive, guys. Nothing wrong with it at all. Goldman, we had that reversal, and we came back up. We took half of that candle. Let's see where Goldman goes. I'd like to buy Goldman closer to here, the 50 and the 20-day moving average, and even back to this channel. We'll see where this thing goes. But I really don't want to. I wouldn't want it to price to get below the 50-day moving average. But Goldman right now, really no trade. I want to see where that goes in the next couple of days. That might be interesting as well. And then here's the XLF, just showing you the financials. Again, consolidating. So the markets have been really quiet, consolidating the last 2 days. So has Apple. Now, Apple is interesting. If Apple could get above 434 on a consolidating up here, then Apple has a really good shot to run up to that 4.7, like I mentioned. Easily, though, Apple can reverse and just literally break down and get that 20-day moving average, and then obviously retest the lows again. So Apple is in this sandwich between a 50 and a 20, and Apple's going to have to really start needing to prove itself rather quickly. Otherwise, we can easily get a breakdown here. So something really to think about in Apple. But Apple so far holding in, obviously with the market. Lastly is the Qs. Qs doing quite well. Now, Qs might be interesting because we have IBM, we have eBay, and Intel. They all reported. 2 of them were really negative at the end of the close last night, and IBM managed to eke out a gain. So we'll just see how this thing goes tomorrow. Actually, today, excuse me. So take it one step at a time. But it's actually very quiet. Please don't get stubborn with your trade. If you just get stopped out, take the loss. It's not worth it, especially in this low volatility environment where there's a lot of people out. You could even see it in the trading. Okay, and also remember, the moves, they get exaggerated because there's less market participants here playing, so the moves can get exaggerated. So just keep that in mind as well. All right, guys, have a great day today, and we will speak to you tomorrow. Take care.